Hello everyone, my name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for August the 18th, 2010. Now, our first position for tonight is a continuation of our last week's gold contracts. We got into some very good long positions here. Now, we have our triple EMA cross that's made its move. Our predicted medium and long-term differences all look good. Predicted MACD and predicted true strength indicator all supportive of this trade. Now, what we're looking for here for tomorrow is an area to pull back so we can buy on dips. Key levels 1203.40, 1211.70, and 1221.90 with a close of 1226.60. Now again, we're getting up into some resistance in this 1260, 1240 area, but I think we do have room to extend based on the US dollar weakness, based on the stronger commodities move today, a number of indicators. But to point out, even during last week's violent sell-off on the euro and on the equities, gold continued to remain bid. So we're going to stick with our buy positions here, and now we're just going to basically fine-tune the entry point. So with that said, let's go in. We've identified our three key levels of pivot support. Now let's go into the daily report from Vantage Point and have a look what we've got for, a predicted range for tomorrow. Now I imagine it's going to be another tight range again. We've closed at 1226, which is slightly higher than yesterday, which is good. Our low for tomorrow, 1223.40. Our high, 1230.10. So 1223.40, we're now going to take that and match that up to one of our predicted moving averages to again narrow down that pivot point. So our first area is 1221.90. I would be more comfortable letting it pull back a little deeper than the 1223, but for tomorrow we're going to narrow down the area where to get into this buy position. I'm going to suggest between the 1221 and 1223, anywhere in that area is a good place to get back into the long positions. Our stops will be below the 1203.40 area, again to stay out of that broker radar and that intraday volatility. Now if we get a dip back if it pulls back a little deeper towards this 1203 area, I also think that that's another good area to use as a buying opportunity. Now again, looking at all of our main indicators, we're not in overbought territory yet. We can see that on our predicted true strength indicator, we're getting close. It's touching on that 20 area, but not quite yet. So for now, we're going to stick with those buy positions. Now our second position, we're going to go into the foreign exchange market, and we're going to again look at the US Canadian pair. Now you can see that I have a number of lines drawn up on my screen here. This most recent one that I've drawn is right here underneath this 105 area. Now I've talked extensively about this currency pair during the Forex weekly outlook, outlined for basically about the last year. We've been trading a 108.50 to 99.35 area, and this range has been continually tightening to the downside. Now we can see that we've most recently gone from a 107 area down to the 99.35, excuse me. Then we moved down a little lower around the 106 area. Now this week, even though the software has tried to put out that buy signal, we can see that now it's stalled significantly again at this 105 area. So, and from there we've moved all the way down to the 103.9 area today. So very big move, but we can see that there's a pattern to what's happening here. Very clearly a bearish outlook to this currency pair. Now US Canada is dependent on two things: crude oil or commodities and equities. It's following the equity markets very closely. The equity move we had today coincided to a strong move in the US Canadian to the downside with that weaker dollar. So taking all this into consideration, we want to identify our key levels, in this case of pivot resistance: 103.76, 103.62, and 103.49. For tomorrow, 103.76 looks good to me, but we're going to go into the daily report just to make sure that the daily report is not picking up on something else maybe that the charts have missed. So looking at this, we can see 103.78, our neural index has turned negative. All of this is positive for the bearish position that this looks like this is in. 102.93 is the low. So for tomorrow, on a retracement to the 103.78 area, or very as close to that area as possible, we're going to use that to set our short positions, and we should expect a move, or we would, providing the equities and the crude oil contracts cooperate, we should see a move back towards the 102.80 tomorrow, 102.50 possible. But again, very dependent on the commodity contracts, the outlook of the global economy. All of these play a very large part on what happens with the U.S. Canadian pair. But the main thing is, for now, we can identify a medium and a long-term range, and that's really of critical importance that we can see this, that, you know, going over almost a 12-month period, the U.S. Canadian pair has only moved in a range of about 900 pips or 9 cents, which is really not a big move, believe it or not. So we'll be watching this one closely, and of course the gold contracts. And if we are trading U.S. Canadian tomorrow, we definitely want to keep an eye on those crude contracts. Now, our British pound US dollar trade from yesterday, we're looking at this again. We've basically closed flat at our entry point. Now, the question is there further upside potential on the British pound US dollar? In my opinion, there is. Now, our predicted stochastic is bottoming out in overbought territory. You can see that I've drawn this line right across here, just off the 155 level. I do see this as a good buying opportunity on this dip. I see it further as a corrective move, and as long as the British pound US dollar stays above the 154.50 area, then I see it all the way down to this area still as a good buying opportunity, because again, we're not seeing any real strength in that US dollar index. Now, to help support what I'm saying here, we wanted to actually look at that US dollar index and see what's happening. I talked about this extensively in the Forex Weekly Outlook, and we can see here that I suggested that the 83.50 area would probably hold and we would pull back. Now, I've drawn this support line down below. I'll just back this out a little bit here so everybody can see this. It's very important that, again, we look at the medium and the longer term view. Now, looking at this, you can see that I have these 2 points drawn on the US dollar index that 2 weeks ago I talked about, that I suspected this area around the 80 level would hold and we would get a bounce, but it would be corrective in nature. So far this week, it looks good that we're backing away from this 83.50, 83.70 area, and as long as it continues to move lower, back below that 82, we've closed the day today at 82.34, which is a full 1 point below that 83.50 area, which is a good sign. So as long as this continues to move down, it confirms it's a corrective move, we should see that pound dollar move higher. So those are the market positions for August the 18th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.